coronavirus, the Fed minutes and more, and maybe dwell a bit on the commodities as well, because gold and crude are showing some completely different divergent trends. Peter McGuire, Chief Executive Officer at XM.com, who actually looks at all of these very, very closely, Johnson, right now. Peter, thanks for joining in. The first thing, I mean, the Fed minutes clearly dovish. Would you take that as a positive for the near term? The Fed is unequivocally saying that rates will stay where they are for the time being.
Well, good afternoon. Good morning, Niraj. When you look at it, you've got to say, well, have a look and only look at one thing, US dollar index. And what does that show at the moment? We're nearly through 100. So it's been a very, very solid move to the upside over the short run. And we're back to nearly the numbers that we experienced a number of years ago with 101 or 101.50 for the US dollar index. So interest rates, it's the best house in the worst street. Simple as that, Niraj.
Okay. The other bit, of course, Peter, is the kind of scare that we have from coronavirus. Now, I know you would have spoken to people all across, even if you would not have traveled in the current times. There are two things out here, right? China changing the methodology means that the number of cases detected is going down. But the problem is that some of the other regions are now showing increased cases. Hong Kong, I believe, has 2 deaths. South Korea has some more spreading as well. What do you think? What are people telling you about the after effects of this, if not the actual effects right now?
Well, exactly, and I read that this morning that Iran has had 2 fatalities there. So there's 2. So that shows I suppose, the penetration to the market. You've got any airborne or a virus of this magnitude is just showing its true propensity to get to all levels of not only environment, but certainly locations. We've got far afield to Australia, all the way through Asia, now to Iran. So it's a great issue, and unless it can be contained in the short run, what's the headline number going to be if it gets to a large population like Southeast Asia en masse, the likes of, and you can only let your mind run wild.
Okay, Peter, then let's not try and do that, and let's try and talk about something that you have great expertise in, commodities. And I really wanted to check with you, what do you think first about gold? Because that commodity is on a high in Indian rupee parlance. It's already trading at life highs, and some of the other precious metals too, like palladium, have inched up. What are the technical and the fundamental triggers? What kind of levels are you eyeing on gold?
Well, you've got to look at it over the last 5 years. We're at highs in Aussie dollars. We're the same as what you're experiencing, all-time highs. So it's got the capacity, I think, to knock, that 1630, 1640 in the short run, quite simply because you've got that. And think of this also. You would expect that the US dollar would be sold off and gold would be trending higher, but both are going up in unison. So that shows you the fear in the market, and that really is captured by large price spikes over that, 3 to 4 month period for gold. So through 1610 and onward and upward from here. So that's what many analysts are saying, and US dollar also in the similar boat. So that shows you, again, fear, and that's what drives markets.
So you would reckon that gold uptrend would continue. What about crude, Peter?
That's a hard one. You've got crude. It's been whipsawed all the way to 48.70, I think. It's back up at that 52, 53 range. You've got demand destruction as far as China, and we all appreciate the big headline numbers. You've got revisions down by the 3. OPEC, EIA and IEA as far as numbers coming into that first and second quarter from a consumption base. So we know that the world's awash with oil. You understand that they've got, it's a different environment today than what it was a number of years ago with the likes of shale as the main, disruptor. So, yes, I think that oil's going to continue to be whipsawed, Niraj. There's no doubting that. We can't get a definitive trend. And if numbers of coronavirus increase tremendously, then it's going to be more demand destruction. Airlines will be using less, trucks, buses and everything else, and certainly shipping. So oil will continue to be volatile and whipsaw.
I just have one small question, one final question, Peter, on this conversation. With an assumption that things will settle at some point of time, fundamentally, what kind of levels do you see crude moving up? There will be a sentimental uptick, yes, but fundamentally, where could it settle at in the near term?
Well, you've got that US dollar being strengthened. So if that was to take a little bit of a handbrake and you saw the US dollar come back, I think crude will edge up higher if you can contain coronavirus. You can start easing the concerns as far as demand destruction. So there's probably another $3 to $4 to the upside. But there's a lot of ifs to take place, Niraj, and there's no chance that that's going to. Well, I don't think that's going to happen in the short run. So you've got let's see where we are this time next month and the next month, and with that, the hope of warmer weather, which could contain the virus.
Okay, Peter, we'll leave it at that. Thanks much for taking the time out and speaking to us today.